Hey folks, happy Mother's Day to your families, to your moms and your wives. And it's Sunday, May 10th, 2020. Let's go over our expectations for the upcoming week. Uh, Let me begin with two alternates. Both suggest that this is going to be a stuck up week or SU week into OPEX or options expiration. Um, I'm starting out with two alternates, like I said, and I I'm retaining the alternate B um, because we were expecting downside on Friday as per cycles, and market basically evaded that from 11 a.m. There was a down cycle, uh, but eventually it kind of petered out in terms of the extent being shown by the down cycle. So at times the lost pointage can show up on the subsequent trading day. So literally for alt B to play out, we have to give it until Monday and most likely Monday open. So that's why we have this, and I'll show you why I don't think this is gonna occur. Because the technical models are saying it won't occur, but this is a cycle's viewpoint. So if I were to basically ascertain the cycles based on what technical models are saying, we should actually get a gap higher into roughly maybe Sunday midnight and achieve close to 3,000 on SPX cash equivalent, or precisely 3,008 actually. So maybe 3,000 on the ES. So this could be Sunday or by Monday morning. I don't know. There are some twists and turns in the cycles, as you will see. So the net of it is that if we do approach the 3008 number, we can fold longs, at least the short-term players can fold longs because the intermediate and longer-term trend is still higher and look to reacquire between Tuesday and Wednesday. So from there, I think the biggest CIT after what happens on Sunday, Monday. I mean, there is a gap. There is going to be a gap. My predicted direction is up, uh, but if the lost cycles of Friday play in, it could be down as well. So I really don't know. So from here, let's move over to the VIX model. The For the model, the Monday close is actually slightly lower than the Friday close on the model. So Monday should have a downward pressure into after hours. And so once again, we'll have to see if we get the gap higher. From there, we're gonna go sideways, I think, into Wednesday 3 a.m. That's Tuesday overnight here. That's Wednesday 3 a.m. So it's the Wednesday bar. And from there, it's basically a stuck up week. Okay, here's the new sum model or the unified model. The intent here is to actually obviously map the entire day's bar with the projected high, low, and the midpoints. And I was back testing visually. Once you manage to close below the midpoint, as in from the April 29, 30th high, we closed below the midpoint on Friday. That pretty much guarantees a touch on the low side. So this is 2882.4. I think we actually hit this on the ES levels. These candles actually belong to S&P cash, but on the ES we actually tagged the low line. So from there, if we review last week, if I had this model last week, we could have improved our outcome for the final call that did not work out late last week, the final setup. So this is Tuesday. It closed above the midline, which suggests positive action. Wednesday is again positive action because it's above the midline and it's suggesting a move higher. So the low point was actually 2857.81. Um, and so when on these 2 days when the market actually declined after hours, both times it was actually a buy here. So, and we kept expecting another tag of the low line, okay, as per the cycles. But this model would have suggested otherwise. Once again, Thursday close was a buy, and we got the big move on Friday overnight and then during the regular trading hours. Now for Monday, once again, we're above the midline, so I don't have a reason by which I can say the market would actually move below 2920.60. I can obviously subdivide in subdivision of midline, and the low line is around 2877, I believe. 6888, 44, yeah, 2977. So if we do get this alt B, I think that's where it'll end up, and then move higher. But if we just follow the technical model, it shows a move towards 3008.84, at which point it's a great for the short-term longs and reverse the trade, and the low side is 2920.60. So here are the reasons why alt B should not occur. Okay, I mean cycles say yes, but here are the reasons why I expect that not to occur. So we constantly had sells at 1 degree or the other last week, and all of that cleared up on Friday. Monthly pivot remains at 2915.45. Weekly is not now poised higher above the monthly pivot, and all other degrees are positive as well. So, and the close was above the pivots as well at 2929.80. Recapping, recapping all the models, what we can see is even in the from an Elliott wave point of view, all the waves have turned positive, and we have higher targets from these waves right here. The one that remains negative but is supported by 2911.71 once again suggests that this could be the worst downside for this week. Obviously, clearing this is once again suggesting that a move towards 3159 is transpiring. And same thing can be said from the Gann model, where the May pivot is higher than the March sell pivot, and of course the April. And the next pivot is 3244.29 from February. So from this model, from Gann model, the forecast is forecasted target is 3244. So from here we get 3159. Of course, if this is exceeded, then it suggests 3247, which is similar in line with 3244. Now here's the cycles, and once again, the job is to map the daily cycles to the hourly cycles over here. Sorry, over here. So this is what I think could possibly happen. Get a gap higher, then an inverted move lower, and then bottom out somewhere around here on Wednesday, by the Wednesday bar or on the Wednesday bar, and then move higher into apex in an inverted manner. And once again, here's the alt B, a spike towards 28.77. If that occurs, that's a buy. Okay, so that's the week for us, and obviously with real-time action we'll be able to play this better. If you would want to avoid the volatility in the early part of the week, then you could simply wait for the CIT midweek, which is a very powerful CIT. All right, folks, good luck.